Everything you thought you knew about the Federal Reserve is about to be deleted. In 84 days, Jerome Powell's term expires. On January 30th, Donald Trump officially nominated the man he calls his biggest mistake correction, Kevin Warsh. We aren't just getting a new chair, we're getting a regime change. The markets are already calling it the Warsh Shock. Gold is cratering, Bitcoin is in a tailspin, and the very structure of the US dollar is on the operating table. If you think this is just another leadership swap, you're not paying attention. By the end of this video, you'll see why the Warsh Doctrine could be the most disruptive economic event of the decade. Who is Kevin Warsh? At 55, he is the triple threat elite. The Wall Street veteran, 7 years at Morgan Stanley in the M&A trenches. The youngest ever. At 35, he was the youngest ever Fed governor, handpicked by George W. Bush to navigate the 2008 financial crisis. The billionaire insider. Most recently, he was the right-hand man to legendary investor Stanley Druckenmiller. For 10 years, Warsh has been the Fed's most vocal critic. He's called the central bank bloated and its staff inefficient. Now he's coming back to his old office with a plan to cut the staff by 30%. He's not here to manage the institution. He's here to dismantle its current form. Here is the meat of the Warsh Shock. Most Fed chairs choose between being a hawk, high rates, or a dove, low rates. Warsh is doing both simultaneously in a move called the monetary barbell. 1. The sledgehammer, QT. He wants to aggressively drain the Fed's $6.6 trillion balance sheet. He views the Fed as a zombie company subsidizer and wants that money back in the private sector. 2. The accelerator, rate cuts. Paradoxically, he wants lower interest rates. Why? Because he believes AI is a disinflationary superpower. Warsh is resurrecting the Alan Greenspan 90s playbook. He argues that because AI makes us so productive, the economy can run hot, hitting that 15% growth target Trump wants, without triggering inflation. He's betting the entire US economy on the idea that Silicon Valley can outrun Washington's debt. But regime change has a body count. Look at the immediate market reaction this February. The Bitcoin paradox. Warsh famously called Bitcoin the new gold and a policeman for bad policy. Yet Bitcoin fell 14% after his nomination. Why? Because a leaner Fed means less liquidity, and speculative assets bleed when the easy money tap is turned off. The bank boom. Warsh wants to privatize QE. He wants big banks to hold the assets the Fed currently owns. This means massive deregulation and a renaissance for Wall Street's biggest players. Traditional hedges like gold and silver are seeing a flash crash. The market is betting that Warsh will actually succeed in restoring the dollar's value. It's a massive transfer of power from the Fed's marble halls to Main Street productivity. But there is a massive IF standing in the way. Senator Thom Tillis has vowed to block all Fed nominees. Why? Because of a DOJ investigation into building renovations at the Fed under Jerome Powell. This creates a dangerous limbo period. If Warsh isn't confirmed by May 15th, the world's most powerful central bank will be leaderless at a time when interest rates are at 3.5% and the national debt is at a breaking point. Critics say Warsh is too close to the administration. Supporters say he's the only one who can stop the Fed from becoming a political arm. Either way, the era of predictable, forward guidance is dead. We are entering an era of high discretion, high-stakes leadership. Jerome Powell's Fed was about stability. Kevin Warsh's Fed is about disruption. One era is ending, another is beginning. Are you holding the assets of the past or the productivity of the future? Comment revolution if you're ready for the 15% growth era, or stay if you think Powell should keep the chair. Subscribe to stay ahead of the transition. The real shock hasn't even started yet.